first, let's take stock of the global market setup. We have Daniel DiMartino, Booth CEO and Chief Strategist at QI Research with us. Daniel, great to have you with us on the show this morning. So, markets around the world, at least on Wall Street and here in India, have been feeling very good on the equity side, even though those expectations of rate cuts from the Federal Reserve are getting pushed back. Do you see this Goldilocks run on the equity side continuing?
Well, traditionally speaking, until the Federal Reserve actually sees the whites of the eyes of their first rate cut, stocks do continue to rally. And I think that that's one of the reasons that we've seen the follow through that we have, even though we've seen a distinct weakening in the macroeconomic data. If the Fed is going to choose to look past the data and continue to stipulate that it's not going to be lowering rates until December, mid-December, then I think stocks are going to continue to have room to run. Again, it's not until there's a recognition that recession is imminent, and that comes when the Fed does indeed lower interest rates for the first time. It may be counterintuitive, but it is the way that it's worked historically.
So, Daniel, hi, good morning, and thank you for taking the time out. So far, the US markets have been very strong. The Indian markets are also sitting at record highs. Do you get a sense that this is something that can continue? And for someone who's watching from the outside, does it still make sense to invest in emerging markets over developed markets for the rest of this calendar year?
Well, I think that that's a very tricky question here because at this point, other central banks have already started to lower their interest rates. They've already started to ease policy. The chances are that the dollar is going to maintain its strength here and that this is going to pull money away from emerging markets, at least in my view, going forward. So again, I think that as a factor of time, as we get closer and closer to the end of 2024, and especially closer to US presidential elections, that the Fed is going to have more control of the narrative than it otherwise would.
Hi, Danielle. Good morning and good to see you. And, from the emerging market basket, though, where does India fit in? Because we have been a rank outperformer from the emerging markets. The problem is valuations, trading at northward of 20 times, while we have a peer like China that's trading at around 11 times. So where does India fit in your emerging market picks?
So I think India is almost a victim of the enthusiasm and optimism that bleeds into India by way of pessimism surrounding China. Of course, China has seen some bump in its data, but that really has more to do with the fact that they're exporting more than they should be otherwise to offset weakness in their domestic economy. I can tell you that from the perspective, again, as an outsider looking in, India has been for many years so hot from the perspective of Western investors that it is always going to be the go-to. In addition to, ironically, here I am in Texas, in the south of the United States, in addition to Mexico also being perceived as being a sort of safe haven among the emerging markets, because these are the supply chain ties that will bind going forward. And that's something that is accepted as a narrative looking out 5 to 10 years into the future. We see India, we see Mexico as being, again, relative safe havens within the emerging markets complex.
Sure. Daniel, the thing is that while we hear that from exactly the point that you made from a lot of foreign investors, the money is yet to show up this year because this rally, this market's been driven entirely by domestic money. So what are the conversations you hear around you? Is it that people are still more comfortable if NVIDIA is still giving you the kind of return that it is? Why look for emerging markets? Why look for in India? Is that the thought process? What do you hear around? Because the home market rally is still going so strong.
Well, that may be the case, but at least from my perspective, I tend to not run with the consensus. So I'll put that out there as a disclaimer. We are seeing a distinct weakening in the job market. We have a major revision coming to our payroll statistics in August. And there are a lot of people who are in my camp right now who believe that the Fed is in the process of committing a policy error and that they will, in fact, be forced to lower interest rates by the time the September Federal Open Market Committee comes around. In other words, that there's going to be a swifter shift in in what the Fed is forced to do to acknowledge the weakness in the underlying U.S. economy. We have retail sales coming up tomorrow morning. We know that Americans have stopped charging on their credit cards for the first time in 3 years. The evidence is multiplying that the United States equity market rally is in its last throes, in its last hurrah, and that we're going to be seeing a real pullback here in the United States, which will force U.S. investors to look outside.
Oh, that's a really interesting perspective, Danielle. Sonia, you heard that? The last hurrah, perhaps, says Danielle for Wall Street.
Okay, I mean, that's interesting. But I want to come back to the point you made about emerging markets, right? You said that India and Mexico continue to be safe havens in the emerging market universe. But you also said that things may not be as strong as they have been in the recent past. So what does an emerging market investor, an investor watching you right now, what does he do for the rest of the year, he or she?
So I think the best thing that I think the best thing that all investors can do at this point is to understand the ripple effects of a true downturn in the United States and how that will be perceived and reacted to in other markets. If the United States catches a cold, it's a very, very old cliche, but it certainly continues to apply. And again, I would draw your attention to the fact that we've gotten through many elections, but that the one election that we're getting through that's going to be the most important and potentially the most contagious to the rest of the world is going to be that of the United States. I will go back again and say, I think that the time the U.S. elections are upon us, that the Federal Reserve will be in a rate-cutting mode. You have to ask yourself, what are the repercussions of the United States market coming down in the event that people need to, as we saw last week in France, with its stock market coming down 9%. All of a sudden, by Friday of last week's trading, that was bleeding into our risky asset markets. I think people have to stop and look at the financial markets in a very holistic way, because sometimes when there is a rush for the exits, there is indiscriminate selling and plowing into what are perceived to be the most safe havens. That would be gold and U.S. Treasuries.
Okay, Danielle, we'll leave it at that. Thank you so much for joining us and speaking to us on CNBC TV 18. Appreciate your time here.